All right. I'm going to try to apply some more Stan Weinstein stage analysis to Forex gbpcad, Great British Pound, versus the Canadian dollar, the Loonie. And it's still a discovery process, trying to see how the basic elements, the basic tenets of Stan Weinstein's framework, how they fit with Forex. Remember, it's a zero-sum game, not quite the same parameters that Stan was using when he developed his techniques, his observations, to try to isolate stage 2s, stage 4 breakdowns. So we're just going to keep doing it and figure things out, get some observations in, and see how we could leverage his framework, guys, on Forex pairs, because I just love them. The liquidity of Forex is just insane. 5 days a week, 24 hours each day. All right. Let's do it, guys. Here's the monthly candle chart. See that nice base back in the days? 1, 2, 3 year base. Exploded. Okay, what do I need? Let's start with trend lines. Zoom, 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 zoom. This could be the top. Are we breaking down right now? Is this a breakdown candle right here? If so, arrow, top to bottom, added to breakdown line. Oof, that is low. That is low, 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 low. So when I see stuff like that, where my targets is going right through some monthly defined support, not quite a fan. That lowers my chances, lowers the probabilities of me reaching that possible target. So what I do is something called target considerations, and I would just move my target, make a smaller target right here. Sure, I have less reward, but I increase my chance of reaching it. So how would happen here? Now we're in August. I would enter wherever this monthly candle close is below that breakdown line. So let's say it ends here, and then after that I put my sell stop here above that candle. Let me zoom in, or explode. And I'd put my sell stop, my profit limit right here at the target. That's it. That's my risk. That's my reward. There's even this cool tool on TradingView, guys. All you have to do is like that. It highlights. You put where your sell stop is, where your entry is, and where your target is. What? Why is it so big? So what that's going to give us? That's a risk to reward ratio of 2.72, guys. So that's, at this stage, that's pretty good. If you're able to reach that implied measure move, guys, it is awesome. I always say the lower the risk to reward, the less greed, the more probable of reaching that target. The higher the risk to reward, the less probable of reaching that target. Either because you're too close to your entry, not enough distance in case of whipsaws, not enough support or resistance to protect your sell stop from getting whipsawed out, and combination of both for those crazy 1 to 12 or 1 to whatever. You're just far further away. So that's Q. So the higher the risk to reward, the lower your probabilities of reaching it. So that's pretty much how that sets up. We're actually breaking down on the monthly candle chart, and there's a possibility of us hitting these lows right here. See the target? There's wicks, noise below that resistance line, support line. So it is possible that that first target will reach there. It's not even the lowest lows It's on an all-time low. There was a couple of times where you actually hit that. But just to make sure that you get triggered out before starting to hit that congestion, you don't know how deep it's going to go through. That's how I do it. Okay, let's zoom in. So now the trend is possibly downwards for that pair, that Forex pair. Oh, wait. I have a Stein-Weinstein setup comparing to the SPX, but I did some tests and it's more accurate or more helpful if I could pair to, drum roll, that's my Forex Stein-Weinstein, to the DXY, guys. The DXY is the US dollar index. It's value versus, I think like 40% of that basket is euro, maybe 10% Canadian dollars, 15 Japanese yen, and some of the currencies out there, the major currencies. So it's like the SPX 500 is a top 500 companies or top from the NASDAQ and the New York Stock Exchange. This DXY is giving me a basket of currencies to which I could compare the performance of that pair. I'm starting with that. Might change my mind. I'm still in the discovery process of how to correctly apply this, or the most efficient applying of Stein-Weinstein to Forex, guys. I just love Forex. And then I just came back to it because I saw that there's volume. My interactive brokers, guys, it was slowing me down. It's archaic in some manners. There's no volume. Ask them to have volume for the Forex. There's no indication that they want that. They have no Mansfield relative strength indicator. I can't even program that in. So it's kind of getting blocked technically. And right now, with volume, with the Mansfield relative strength, I don't see why I can't do Forex, except that since it's zero-sum games, the behavior might be different than the way Stan did it. So maybe the stage fours aren't as violent. It's not as driven as fear as in the stock market, and more of a sinusoidal curves, maybe like the ups and downs. Maybe they're just more evened out than crazy stage four fear, panic, sell button, crash. Nobody ever says a crash like for a currency, right? Or it could happen, I guess. So I'll figure that out through observation. Okay, here we are. Starting here. Remember the red below the performance of the US dollar index. Decline 30-week moving average and price action below. And what else do we have? Well, Ichimoku cloud, guys. Ichimoku defined support, and we're right there, man, like going through it. So this, like, the timing's perfect. So even if we had a start of a breakdown here from this pattern, we still haven't had the decline MA. You want really that trend, right, to start going in your favor. We still weren't through the cloud, though we have it increasing red candles, guys. So that's kind of nice. I'm not still convinced about the behavior of the volume candles and how that affects the price action. I know for breakouts, I've been looking at it, and those breakout candles, they don't have twice the average of the previous 4 weeks. They have more like maybe 20-30% higher when you have a single. So right here, you see those volume candles increasing. And now here we are today, guys. Are we close to triple confirmation? I think so. I think if we're below the Ichimoku cloud, below this weekly defined breakdown line, if we have that monthly close below this level right here, the 169.995, maybe 170, see that nice round number, then we get that target on the monthly candle chart, bring us all the way down here to 161, the corrected one. And if you're greedy, then you have no fear, 158.71, that you think you're going to drive through that monthly defined support. But for stage 4, it looks pretty good. Is there going to be a pullback? See, it broke down, top, pullback, down. So let's see what happens here, guys. There's going to be a pullback towards 30 moving average, and then a retest, and then down, and then a couple of pullbacks before we go all the way down, most likely. And we would move our sell stops the same way, right? Initial sell stop right now for below here would be above the pattern or above the 30-week moving average. We have to see here. We have a couple of weeks left, so this might Patrick, what'd you do? Okay, that was my monthly defined breakdown line. We'd be above here on the pullback if it's on low volume. Still in the process of understanding the impact of volume on Forex and what am I actually looking at. But the premise of stage 4 is there. The premise of pullbacks, breakthrough, support, continuation, everything seems to be there, and relative strength versus the other currencies through the view of the US dollar index. Everything seems to be in line, guys, for that. Look at that. See those nice stage 2s? Whoa, right here. Do we have volume? Let's go check it out here. What happened? Zoom, 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 zoom. See, not necessarily some volume candles. Maybe a little lower right here. It started giving some signs that something was changing. Yeah. Right here. These candles here. Volume's trying to increase, especially this one. This one right here. But would have not entered here, right? Volume's just one part of the equation. You want the 30-week moving average inclining. You want to be above the Ichimoku cloud. You want the price action to be above the 30-week moving average. And you want also to, what we're going to do, let's go put a red line there, go in on the monthly. And you want also, whoa! What happened here, guys? Okay, here we are. And you want also to have a break above a horizontal breakout line. So right here, we didn't have all of those elements, you see. The ideal, so remember breakouts, embryonic breakouts, giving you other breakouts, bring the price action to important resistance breakout lines. And when that bigger pattern composed of all those smaller patterns explodes, that's when you have the big move. I'll use that in conjecture. Make sure there's a harmony between that. And the first breakout is the one at the bottom. Bottom is usually not the one that you're going to actually be able to play. It's actually going to be the second or third one. All right, keep that all in mind. I think we're getting close to being able to actually preparing some trades. I'm going to be going through the other Forex pairs, the major. I'll be scanning them and doing a few podcasts there on the most interesting ones that are getting ready. So we had the Euro USD, now gbpcad, and I have a whole bunch, guys. Look at that. Woo! Loads of fun. All right, guys. See ya. Ciao.